Another day, another book summary. The Little Book of Common Sense Investing, by John C. Bogle, is a classic guide to investing for the average person. Bogle, the founder of the Vanguard Group, believes that the best investment strategy for most people is to simply invest in a low-cost, passively managed index fund that tracks the broad market, such as the S&P 500. Bogle argues that actively managed funds, which aim to outperform the market, are typically more expensive and less effective than index funds. He explains that the high fees and expenses associated with actively managed funds can significantly reduce your returns over the long term. Bogle also stresses the importance of diversification and encourages investors to hold a mix of stocks and bonds that reflects their risk tolerance and investment goals. He provides practical advice on how to design a simple, low-cost portfolio that can help you achieve your financial objectives. Overall, The Little Book of Common Sense Investing is a concise and easy-to-understand book that presents a compelling case for why most investors would be better off with a low-cost, passive approach to investing in the stock market. Here are some additional key points from the book. Index funds outperform most actively managed funds. Bogle argues that most actively managed funds fail to beat the market over the long term, and that the fees and expenses associated with these funds can significantly reduce returns. In contrast, he advocates for investing in low-cost index funds that aim to track the performance of a broad market index, such as the S&P 500. The benefits of simplicity. Bogle believes that a simple, low-cost investment strategy is best for most investors. He argues that complexity and frequent trading are more likely to harm your returns than to help them. The importance of staying the course. Bogle stresses the importance of staying invested and resisting the urge to buy and sell based on short-term market movements. He encourages investors to focus on their long-term goals and to maintain a diversified portfolio that reflects their risk tolerance. The role of emotions in investing. Bogle acknowledges that investing can be an emotional experience, and that fear and greed can lead to poor decision-making. He advises investors to develop a disciplined, long-term approach to investing that is based on logic rather than emotion. The impact of fees on returns. Bogle explains how fees and expenses can significantly reduce your returns over time, and why it's important to pay attention to the costs associated with your investments. Overall, The Little Book of Common Sense Investing is a clear, concise, and practical guide to investing for the average person. Bogle's message is simple: invest in low-cost index funds, stay the course, and focus on your long-term goals. Thanks for watching. Subscribe for more videos.